The Physics of a Market Ignition and Rebirth for SPCX 1. The Narrative of Despair. In the court of public opinion, the story of SPCX was over. After a meteoric IPO, the stock entered a brutal free fall. The fundamental narrative, reflected in media headlines, shifted from visionary excitement to a story of failure. The consensus was that the company was burning through cash, its technology was unproven, and its business model was flawed. Analysts had written it off, and the public sentiment was one of total despair. This was the rumor that the market sold, and sold aggressively, for weeks. 2. The physics of capitulation. But while the story was one of despair, the internal physics of the market were telling a different, more powerful tale. In late July, our instruments detected a rare and significant event. A double bottom in the demand ratio at absolute zero, 0.000. This is the mathematical signature of a complete and total capitulation. It is the moment where every last panicked seller has been forced out of the market, and the selling pressure has been fully exhausted. It is the point of maximum pessimism, which often precedes a change in trend. 3. The ignition event. Then, on July 27th, while the price was still at its lows and the public narrative was at its worst, the engine reignited. Our acceleration gap, A-gap indicator, which measures the underlying momentum of force, flipped from catastrophically negative to massively positive. This was not a gentle flicker. It was the mathematical equivalent of a fusion engine igniting, signaling that a new, overwhelmingly powerful wave of accumulation had begun under the surface, completely invisible to anyone watching only the price or the news. 4. The projected path forward. What happens after such a violent reversal in force? To project the path forward, we apply a third-order polynomial trend line to the recent demand ratio data. The mathematics are clear. The model projects a powerful, U-shaped recovery. The trajectory of force has fundamentally shifted from down to up. This powerful new upward momentum is now carrying the asset towards its next major catalyst, the scheduled earnings report on August 4th. 5. Sell the rumor, buy the news. A structural certainty. This brings us to the classic sell the rumor, buy the news pattern. Our analysis shows that the market has already completed this pattern in the most extreme way possible. The sell the rumor was the collapse to a demand ratio of 0. The market has already priced in the absolute worst-case scenario and total failure. The buy the news event on August 4th is now the highest probability outcome. Because market expectations have been driven to 0, any news that is simply not a complete catastrophe will be viewed as a massive positive surprise. The powerful accumulation we have already detected, the positive A-gap, shows that smart money is already positioned for this outcome. The news will simply be the spark that ignites the fuel that has already been loaded. 6. The bottom line? Listen to the engine, not the noise. This SPCX case study is a masterclass in market physics. It teaches us that the point of maximum narrative pessimism is often the point of maximum structural opportunity. While the headlines were declaring the company dead, the data showed that a new wave of life had begun. The August 4th earnings report is not the reason for the turn. It is merely the event that will make the turn that has already happened obvious to the world. For the strategic investor, the lesson is clear. Learn to listen to the engine, not just the noise outside. This is educational, not financial advice.